Welcome, welcome. It is 30 with Justin and Karen, and with no Karen today, which is fine. Every now and then she takes a day off, and I don't mind it. But we are here today with an incredible guest. We've seen him before. He's been on the show before. Jivan Sangera of Circle Mortgage. Really short intro. This guy has been a mortgage broker for a lot of years, knows this stuff. And the thing that I will sort of I'll pump his tires a little here. The thing that I love about him the most is that genuinely he's doing the right by all of our clients. He's doing right by he puts people in a position the same way he put his family in positions, right? So he'd be treating anybody that's out there as a client of his, like his brother, sister, mother, father, whatever, because that's just who he is. He puts you in the right products for you, which is actually a good segue into the conversation that I want to talk about. So Circle Mortgage, we'll put all his details below and I'll mention that at the end as well. But if you want to reach out to Jeevan, Google Circle Mortgage in Burlington and he will definitely reach back out. Jeevan, how are you? Good day today.
How are you, Justin? Thank you very
Really
much for
good
the
day today. We
invitation.
had a couple of
That's
sports teams winning
great.
last night, which
That's
was fun.
the Jays have been fire, and it's been absolutely awesome to watch
Yeah.
and
Yeah.
to be a part of it in my own little way. And it's everybody just the amount of people I'm talking that say to me like, oh, before I was a huge Leaf fan, I was actually a huge baseball fan, almost
Mm-hmm.
a bigger baseball fan. And I think. I think that strike of 94 or 95 really ruined baseball for a
It
lot of
really
people back
did.
then.
Yeah.
But the way everybody's coming back now, 30 years later, mind you, but the way everybody's kind of coming back and the city's embracing the Jays, like, you know, I if you were to tell me in April that that the Jays were going to take care of the
Oh,
Yankees in the
listen,
Bronx in
I was
four,
the
buddy,
biggest. I shit on John Schneider so hard a few times,
oh my God, yeah.
and I feel
Like,
bad about it
well,
now.
no, even the fact that but even Schneider, I wasn't aware that he'd been in the company for like 20 years now.
Yeah,
Everything from, a catcher that couldn't make the bigs to having coached everything from their single A team now to their big ball club. So it's like that part actually kind of endears him to me
it
and
does.
probably
It does. And
it
he's
probably
actually
gives me a
played
little
with
bit
those
more.
guys or worked with those guys from the time they started in the major, like in the minors. A
Yeah,
lot of those players
exactly.
were
Like a lot
coached
of
by
these
him
guys
as
in
a young guy.
2017.
Yeah.
Bo Bichette's already been coached by him. Vladdy's already been coached by him. Like
Yeah.
it's kind of crazy as to parts of people's journey that you don't know. One thing I did want to clarify though is that you said I treat everybody like my family. Respectfully, I don't.
Oh,
I
well, there
don't.
you go.
I definitely enjoy having everybody in my circle, but I don't call my customers at night to say goodnight, mom. I love you.
No, you won't do that. No,
It's just
no.
that's kind of where the line is drawn. But
I get
everything
it.
else is a matter of courtesy and accountability. Absolutely. I do deal with my customers like I'm going to have to be able to speak to them when I see them at the mall, or at the game, or wherever we run into each other. So it is very important for me to be transparent with people and make sure that their eyes wide open, right? Like everybody's situation is different,
Yeah.
and a lot of times people don't necessarily take time to get an opinion. They just assume that what's in front of them is their only option. And that's kind of what a lot of people are dealing with right now in regards to the renewal notices they're receiving, right? So not to bust straight into it with you, but
Let's do it.
uh, you know, in renewals, people for the last 2 years have been talking about this credit cliff where, people that are 1.82% are going to experience something that is just going to destroy their financial well-being. And, you know, it's just not the case. It's simply not the case. So lenders are working with people to, extend amortizations, do blends, do little refis to help them, budget and make sure that they have enough of a float in those situations. But this, proverbial cliff that we were all supposed to fall off like a bunch of buffaloes being led to slaughter, just hasn't happened. And nor do I think it's on its way. Canada itself definitely has a high level of exposure.
Mm.
The average Canadian owes $1.80 for every dollar they make. So that is a significant amount of debt, and that debt can definitely affect people's buying patterns and kind of the way that they decide to live their life. But at the same time, to assume that that is going to lead to an utter debasing of our market it's just wrong.
It's over the
It's
top.
just
No, yeah. And but circling back to the idea of renewals, like one of the questions we're hearing a lot is, what do I do here? Like, what's the best
Yeah.
path forward? And you're given a couple of options on a renewal that makes it seem like these are the only options I have, right?
I can tell you, we have customers receiving renewal notices from lenders that are considered A lenders at rates as high as 5.79% on a 1 year. And they're not getting additional terms offered to them, which is kind of crazy. So they're giving me a call to be like, hey, lender A is saying that, we're only eligible for 5.79 on a 1 year. So what do we do? And I'm like, well, when they call you back, we say, Jivan said, thank you. There are so many better options available in the marketplace for people. And, the Jays won yesterday and the Leafs won yesterday, but there's a different V word, and that's V for variable, not victory.
Mm,
And sorry, pardon the cheese on
I
that, but
like it.
some
It's good.
serious queso on that last one.
I
Sorry about
love it.
that. But, the idea of going with a variable rate mortgage in this marketplace is that we are expecting continued downwards pressure on, like, calling a spade on what is a pretty pronounced recession, right? So you are a realtor and you're a damn good one, and you and Karen have worked together on and off for a very long time, and you have a very good understanding of our market, and you're very realistic. I find when I'm talking to you about, kind of prices that things will actually fetch versus, people's kind of best idea of what their house is worth. And when you talked to me about that number, the number you gave me was actually higher than the number I had in my mind. So, everything is relative, but at the same time, Canadians, your viewers, people in the greater Toronto area need to recognize the fact that, while we might have what some might consider to be a buyer's market right now, it is in no way a fire sale. Rates are coming down, affordability is improving. First-time home buyers are transacting. They're coming to us without a cosigner, which is crazy. I haven't seen that in 5 years. But they're being able to transact on single bedroom units around the $400,000 mark here in Burlington, and on a combined family income of $100,000, that becomes possible, right?
Mm,
With a down payment as little as 5% of that, which is 20 grand. People are using as much as they want of their RRSPs almost for first time buying privileges. And we can always break that down for people's specific situations. But, realistically, I see a silver lining and I see a coulda, woulda, shoulda opportunity, um, in the fact that it is a buyer's market. There is a little bit more supply than we would expect. And you'd be able to speak to the days of supply a lot better than I can because you're a realtor and
mm.
I'm just a mortgage broker. But, at the end of the day, what it really comes down to is that a lot of people are are averse in even looking in this market, thinking that everything that they want is either out of reach, or that their own home sale won't put them at a level where they're able to transact at that next house. Which is also kind of brings me back to renewals. Sorry for jumping all over the place. The one thing I want Canadians and your listeners to understand is that when you're shopping a renewal, you don't have to qualify on that Bank of Canada rate
Right,
that everybody talks about
right.
being such an impediment to them moving.
Mm,
So, we have fixed rate solutions where we can qualify you on that actual contract rate. And, in a switch situation, that actually gives you a lot more options, right? Because traditionally you have to qualify on the contract rate plus 2%. So if
right.
you're looking at a 4.5% mortgage today, you're qualifying on a rate of 6.5. And if we're qualifying it just based on the contract rate at 4.5, all of a sudden you have a lot more lenders that your file will fit. And
Right.
that's why people shouldn't be in such a rush to just renew with their existing lender. Call somebody like myself at Circle Mortgage, or speak to whoever you trust in that capacity. Hopefully they're a licensed mortgage person. But get the advice. And if somebody's telling you that go with the 5-year fixed, go long term, um just run. Right, just run. Because you know what, that's not the market that we're in.
Right.
Almost everybody that can afford a fluctuation in interest rates, in my opinion, should be looking at variable rates. The market itself has already priced in another quarter point reduction. Prime's at 4.7 today. We're expecting it to be 4.45 by the end of the year. And if you're in a prime minus 60 variable at 4.4 off of 4.45, you're looking at a rate of 3.85% today.
Mhm.
And although that might be significantly higher than the 1.99% contract some people signed, it's in no way going to bankrupt them. Uh, in no way at all. And if
And the
they're
long term sort of idea behind having that variable is that the thought process right now that they're talking more, like you said, more reductions on the prime rate before the end of the
yeah,
year, and ongoing because of the affordability, because of the depression essentially or recession we're in right now, and the idea that that variable is directly tied to those Bank of Canada rates, as opposed to, it seems like every time I see the Bank of Canada reduce their rates in preparation for that, the mortgage rates go up almost
oh
every
yeah,
time.
that was I don't know if you saw my little TikTok on that.
The
I
fixed
was like, they
mortgage
said the
rates.
quiet
Yeah.
part out loud.
Yeah.
Because they reduced. So yeah, they reduced their discount off prime
Right.
in preparation for the reduction in prime,
Right. Right.
which is okay.
I'm sorry.
Banks in Canada do very well,
Yes, they do.
very, very well. Highly capitalized. Mortgage arrears are up, but they're in no way a fire sale. They're in no way, in my opinion, of course, a high level of exposure to the banks that all of a sudden is going to turn their books. So when I see companies turning multi-billion-dollar quarterly profits, and whether their capitalization levels being what they are, uh, it really grinds my gears
Yeah.
to see the way that the end consumer gets the screw job, and their protection of profits. And again, if I get on that soapbox, buddy, we'll be talking till next Thursday.
At
So
the
I'm
end of
going to
the
stay
day,
off.
it feels like they just want to squeeze the last little bit out of the consumer prior to the overall long term idea of mortgage rates eventually going down.
Well, the
Right.
other thing they're really telling you is that the expected reduction in prime is a lot larger than what any of
Right.
us are thinking.
Right. Interesting. Good point.
Right? Because they're not budgeting for the December meeting, bro. They're budgeting for 5 years.
Right.
Um, so in that capacity, when you take a look at Canadian unemployment, and those levels rising substantially, when you see the amount of immigrants, or not immigrants, but temporary residents that are leaving, um, and forget temporary residents, when you take a look at the amount of Canadians that are leaving because they're losing faith in the ability to prosper in our country, you have to take a step back and say, okay, what is really leading to this? And when you look at markets like the United States, um, home affordability is a very different proposition down there. I had the good, and some people might not believe it, but the good fortune of spending almost a month in the States during the summer, and real estate values in comparison to incomes are very low there. The days of the Canadian making 30% more than the American are gone, long, long gone. So people are looking at that, and as mobility of people's skill sets increase, I think the Canadian government needs to be conscious of that, because the brain drain that's associated with these people leaving for better opportunities is also going to put downwards pressure on what Canada's golden goose has been for the last decade plus, and that's real estate. um, and that's something that I think they are cognizant of, and they are being realistic about. But at the same time, knowing that the economic headwinds are going to get worse before they get better,
Mm.
they also can't go with the COVID approach of just dropping prime to 0.25%,
Mhm.
because we've already seen what that does to inflation,
Mhm.
and what that would do to the market. And they don't, they essentially put the fire out once. the last thing they want to do is start another one.
Mhm.
And there seems to be a real appetite still for prices to fall a little bit, but at the end of the day, it's a supply and demand equation. And there comes a point where people are going to start to buy, and you know, um, even if your listeners listen to people that are very large in the real estate industry, we were talking briefly before we came on about Grant Cardone and something he said very recently on a podcast, where he was mentioning that Canadian real estate is severely overvalued and our indebtedness levels are at a point where he believes that there's a lot of vulnerability in our marketplace that could lead to a debasing, an absolute debasing of single family home values.
Mhm.
The one thing I'd say to Mr. Cardone is that I'm not sure when he started looking at the statistics, but the Canadian credit utilization percentage as a matter of their income has been constant for more than a couple of years now. And it hasn't led to a debasing of our market. They've been saying this for more than a few years. And at the same time, Toronto is an international megacity,
Mhm.
right? So when you're looking at different parts of Canada, absolutely, I believe there might be some exposure. But if you take a look at Alberta, prices are still rising in Alberta, right? So it's like you've got some major metropolitan areas, Toronto, Vancouver, Montreal, that are experiencing a bit of a retreat from peak prices, and you'd be able to speak to that. I've heard you
Oh,
say
we're
numbers.
easily back to 2019 right now. So
Yeah. So
easily.
yeah, so if that's the case, right? And it's very unfortunate for some people that transacted during that time that may have bought at the peak. But even there, there's still solid economic fundamentals that say if you can still afford your payments, make them.
Hmm.
Make those payments. And you know what? There are power of sales coming through. I have seen more bank sales recently than I have, shoot, since about 2008, 2009. um, where these not foreclosures but power of sales are taking place. I am getting more calls than I traditionally have of people panicking in those situations, and usually for good reason. But people need to make a choice of their consumption, right? So if you take a look at our friends that worked at Ford of Canada, right in Oakville,
Hmm.
I was regularly seeing T4s for 120,000 plus for multiple years. So to expect those people to adjust to, an income of 65K as provided between the government and Ford,
Hmm.
how do you adjust to that?
Yeah, you
How do
can't.
we adjust to it?
Yeah.
Right? My volumes are down almost, 40% compared to peak market.
Hmm.
How do we adjust to it? Well, we adjust our consumption, right? And if it's one of those things where, somebody has to sell and move to make something more viable, nothing is permanent, right? So even if people have to do some shifting right now just to be a little more comfortable, I think it's so important to keep your boat in the water,
Hmm.
and keep your boat in the water. Panic selling in this situation is not going to lead to any successful outcomes for anybody, really.
So the idea here is you start to feel some pressure. You get some bills coming in that you're just not
Yeah.
able to pay. Instead of immediately just trying to fire sale, just make couple of calls, talk to some people, get some advice.
Well,
If there's
three
one
three
thing I've
four nine
learned,
one one one, right?
yeah,
Like that's my sorry, 905-334-9111.
yeah,
But
that's
the
the call.
point is that people will often just only to kind of look at their own, again, tunnel vision, right? So you're in a situation, you feel like your debts are out of control, you feel like there's only a couple ways out of it, neither of them are healthy. Um, and then meanwhile, you're sitting on $600,000 in equity.
Yeah, yeah,
Well, you could call me and if the credit card bill's at 20%, okay, a private mortgages might be at 13,
it's better
but
than
you're still
20.
saving 7%.
Yeah, yeah.
And and you don't have bill collectors calling you, and your credit score gets an opportunity to improve because most privates don't report. Um,
The
and
interesting part about it though is that people just bury their head in the sand when they go through these problems because they're embarrassed, they don't want to talk to other people, they don't
yeah,
know what to do, they don't know where to go to get advice, and they don't want to ask people, where should I go for this? Because it's an
absolutely.
embarrassing thing. And so, going down the path of like just completely burying their head in the sand, and then it gets worse, and you ignore the next, and you see the movies I've got a stack like this, and they go like this in the movies, and they go bill, bill, bill,
Yeah,
bill, and you're like, oh my god, and you don't want to do that and have those overdue bills sitting there on your desk over and over again every month. You want to deal with it because the faster you
absolutely. You want
deal
to deal
with
with it.
it, the faster you'll get out of the situation you're in.
And the
And
cheaper
there,
it is.
and the beauty part is there's people like Jeevan and other people around that can help, you know?
Absolutely.
So and
Absolutely
I
can
think
help.
what happens is we get this bleak sense of like, there's I'm screwed. There's nothing we can do here. What's our I don't know. And then you just panic, and that's where the panic and fear sets in. So
And once you start to do that, you're literally manifesting it getting worse,
yeah,
right?
100%. a hundred
And
percent.
I hate to be that kind of woke for people or that kind of
No,
left
you're
field.
absolutely right though.
But, the mindset that you take will very much manifest what's in front of you, and there's solutions. Now, don't get me wrong. If you're at 90% of your property's value and you're coming to us, we have a fiduciary duty to protect our lenders. So we will not be lending in those sort of situations. But at the same time, if you're in a situation where you have equity and you're facing these, even if you just need an additional line of credit, there's banks out there like Home Trust and First Ontario Credit Union that'll do a line of credit for you, even if they don't have the first mortgage. Meaning, if you've got one of those 2% interest rates and you want to protect it, no problem, protect it. We'll get you a line of credit behind it and we'll get your situation solved. And, sometimes there's a cost to it, but that's, again, the mess doesn't happen overnight. The solution is not overnight either. But if people become realistic about their consumption and realistic about what they can afford to do in this marketplace, then they're in a good position to get up and go. And at the same time, like I meet customers, your customers, other great realtors in Burlington's customers. And, and the one thing I'm really happy to hear, and I haven't heard in such a long time, is my realtors telling me to sell first. And that for me is absolute music to my ears because you know what? Then they're dealing with what they know they have. And we can, and they can make me and my low ball offers, right? So they can have some fun in the negotiation because they're working in a box that they understand, and that the numbers are all kind of black and white on. I think
Always
that's
the
the big.
chicken or the egg to try to figure that out. But at the end of the day, in this market, 100%, we know listings are sitting longer. We
Yeah,
know there's more inventory, so people are taking their time getting through all of those listings to get to yours.
for sure.
And, at the end of the day, I always tell people it's not a matter of if your house will sell. It's not like
Yeah,
it won't sell. If I listed your house for $1, it would sell, right? So
right.
so it's always going to be price. And right, so understanding where your house falls in that price level, once you've got that offer in and you've negotiated it and you're happy, now you take those funds and that money and you go, great, I can afford a $900,000 house over here. I'm going to go do that. And you, like you said, now you can negotiate fully understanding what you're doing, and you can actually do it with very little stress. I don't know how many conversations I've had with people that are like freaking out because they're like, listen, that 900 was my max for me to go to 905. I just don't know because we haven't. Okay, cool. Well, let's go do that first now, then, right?
Yeah.
Because it's just the
Or
smart
it's like
play in this
even people
market.
that are waiting to talk to me, right? They're like, "Oh, well, once we buy a place, we'll circle back." And I'm like, "What?
No,
No, no, no. This is ass backwards that you're talking. Let's talk before you go find a place, and let's talk about what fixed rates look like for you, what variables look like for you, what you're going to qualify for, and what you're comfortable at,
right?
right? People will still have a natural reflex to say, "What's your best rate?" They call, "What's your best rate?" The email,
Isn't that
text,
funny?
what's your best rate? And it's like, my best rate is 2.99% today. That's actually.
Yeah, yeah,
Uh,
but then
yeah,
the next question is cool. That's amazing. How do I get that? And you're like, you can't.
no. So it's like, and how good do you feel about yourself now?
Yeah,
Right.
yeah,
So it's like, I don't know when mortgage rates became a report card for people,
makes no
but they
sense.
are. I had a chat with somebody recently, just this past week, that again was like, oh, I'm going to have to go to a B lender. Oh, this is all my accountant's fault. I could have claimed more income. And I'm like, okay. you paid tax on $40,000 last year. For you to qualify, you'd have to pay tax on more than $100,000,
Yeah.
which is an additional tax burden of almost 30 grand.
Yeah, I love these conversations with you because they
Yeah.
really blow my mind as to A, your ability to do this stuff and work this stuff out and understand this part of the world.
Cheers, bro. Yeah.
And B, the advice you give is so clear and concise. We went through it with another client of ours, my client that I gave you recently,
Yeah.
that moved up to Georgetown. Same idea. He was in this. His actual claimed income is this, but his
Yeah.
actual income for his organization and the company he works on is this. And it's like,
Yeah.
you could go and get a better mortgage rate, but how much more are you going to pay in taxes and other things? It's
Well,
ridiculous.
and this is what I was trying to, another guy, we're closing a condo for them right now. And, when they do their application, income shows $120,000. And I'm sitting here clapping, being like, an easy day today. And then I get their notice of assessment. It says $24,000. And well, you know, $24,000. So it's like in this situation, we were telling the client to put 40K more down. And actually, after all their additional costs and stuff, it was almost 70 that he would have to put down in addition. And he started complaining about his accountant. And oh, I could have claimed more income. And I'm like, this guy has done you a favor of basically letting you make $120,000 with no legal tax burden. And you're sitting here throwing shade at the guy.
Yeah, no,
I'm
no.
like, the net difference in your payment is, even if you take a look at, and what this guy was saying is, well, I could have paid the income tax and then qualified. And I was like, sir, take a step back for a sec. If you pay that 40 grand in income tax, it's just money gone.
Yeah,
I'm like, versus you putting that 40 grand against the principal of your mortgage, where that money is still here. It's just displayed in a different format.
yeah.
And I'm like, please, like, give your head a shake here. This is not the way to do it. And
But people don't think this way.
but
People, they're not
they're not
conditioned to
trained to
think
think
this
this
way.
way, right? Like they're not trained to think this way. And it's like, so again, when we're having those conversations with our customers, there's a whole bunch of stop, no, and don't, right? Like no.
Don't buy a
Um,
boat. Don't buy a boat, please.
no, or even others, exactly. Other situations where, people's car payments
Yeah,
are precluding their ability to qualify on their mortgage.
yeah, yeah,
Um, and that's because they needed that really nice truck. Um, but the thing is again, if people have their priorities in alignment, and they're aware of exactly what they're looking for, then it's a lot easier for them to just exist,
yeah,
right? Like sustainably exist, because there's no fun in doing fun things for only 1 year.
yeah.
Um, no, that's a good time. It's not a good life, right?
Yeah.
So if people begin to operate within their means, and again, always easier said than done. I'm not a great example of that. You know what my habit with cars and the Leafs and
Yes.
the Raptors, but at the same time, I'm not borrowing to do that,
Right.
right? So is it a stupid expenditure? Some people might say it is, but it's not to me. And at the same time, it's something that I've been able to sell to myself and to my wife, thankfully, as something that is a good business move for us to be involved in these things. So, again, I believe that Canadians themselves are a little overly trepidatious right now based on headlines,
Yeah.
but at the same time, it's a good opportunity to buy and sell. It's just a matter of doing it in the same market, which is what you and I have always said from day one. It
Yeah.
doesn't matter
Agreed.
when you buy and sell as long as you're doing it in the same market.
There
Uh,
are really tight caps, like specific caveats to that. Like a downsizer has a really
yeah.
good position.
Oh, for sure.
Knowing that you're going to be downsizing your cash in almost any market is
Yeah.
great, right? Like you can pull that off really nicely. But for the most part, you're right. Yeah, you're buying and selling in the same market. If
Yeah.
you're in that position where you have to do it, make these calls to people like us first and have these discussions before you do anything. And there's
Absolutely.
it's always nice to deal with people that kind of think they know what they want and they fly through the process and you get stuff done. Um, but it's also great to deal with people that genuinely want to do the research first and understand the business and the business side and the little things like you've just talked about that would allow them to be in better shape and advice that would
Yeah.
give them better opportunities. So people like us, accountants, even lawyers in certain circumstances relating to HST, capital gains, things like that. It's one of the things that's come up a lot lately is we've been selling a lot of country property, and the CRA is all over people for capital gains on country properties and HST on certain types of country properties as well. And you wouldn't have thought it, right? People are just buying and selling, but it's like HST is applicable suddenly. What? So there's all these little intricacies that we need to know. I want the final word on this though, just because I know that one of my friends is asking me and I wanted to ask you on his behalf. You're saying variable or fixed right now. Variable is the way to go right now.
Depending on your situation,
Okay.
right? So if it's going to keep you up at night, don't do it,
Right.
right? If it's something that you're okay with and you're able to absorb payment fluctuation, and because realistically, it is possible for rates to go the other way depending on inflation, right? The variable rate mortgage does have some outs. It has some parachute moments where you can convert it to a fixed rate. But genuinely speaking, it's called variable for a reason, and that's because things can change. If you're getting a renewal rate in the threes, that would definitely kind of give me pause for thought as to on the high side risk. In the states, as much as we try not to talk about their current administration, um, if they start their money printer again, which their big, I think it's the big bad beautiful, or no, the big beautiful
Big beautiful
bill.
bill.
Yeah, the big beautiful bill. It's great, but uh, you know, if they start the money printer again because of that, that might lead to some real inflation down south, which could also be a risk for us on the fixed rate side of things. So, everybody's situation is different, and I'm not trying to cop out. But the last thing I want to say is that variable is the only way to go, because it's not. Even that 2.99% product for 6 months that I was talking about, if you have a previously insured mortgage, meaning when you bought it, you had less than 20% down, then that 6 month product might be available to you. And then what we would do in that situation is we would take that for 6 months. And then at the end of that period, we would decide between fixed and variable. And what do I like about that? One thing I don't like about it is it doesn't really pay me at all. But at the same time, what's good for the customer in that situation is that, again, they're able to kick that can 6 months down the road and have a better understanding of
Just
their
gives you
market.
time.
Yes. And, I've been saying for a while that lower fixed rates are ahead, and they have been, and they have come down. Even the variable rate mortgage is down to a prime of 4.7% from a peak of, what was it, 7.25%? That it was up
Wow.
to 7%. Pardon me if I got that number wrong.
It's
I
pretty
tried to
close, I'm
forget
sure.
that portion of my life, and I've manifested forgetting it. So we're going to stick to that. But what I would really say for consumers is that, yeah, absolutely, you should be looking at the variable rate product and what your bank is offering you in that capacity. And you should definitely consider comparing it with a company like mine or whoever you trust.
I agree. I agree.
Right? We
Well,
usually do.
it's been a great conversation. There's a lot of information here. I've put his website down below, which includes all his phone numbers and emails and everything you need to get in touch with him. So click on the link below, and always good chatting. We will have
Well,
you back
Justin,
again.
thank you again for having me today. Sorry that Karen couldn't join us, but I understand. And at the same time, let's go Blue Jays. That's
Woo, I'm pretty excited.
let's go Blue
All
Jays.
right. See you,
Let's
everyone. Talk to you
look for me
soon.
on Sunday. I'll
All
talk to you
right.
soon, guys.